Okay. Good morning, everybody. This is our Macro Moment Trading Podcast, Compound Stock Earnings Podcast. And welcome. Mike is here. Tim will be showing up here shortly. And I don't know if Randy's sick, so he's not going to be on here today. He's trying to recover. He's got a nighttime seminar tonight. And so he's going to try to be in good shape. But who could want more than me and Mike? If you get a chance, go to our website, www.micromomenttrading.com, and sign up for our free cow report, which comes out every Friday. It's been published for about 20 years, and it's got all the in the cow reports, all the things we do, and also on our website, all the seminars we have, what they cost, when they're held. Not only micro moment seminars, but we still do the traditional covered call 2-day seminar. I do that. And Randy does a lot of seminars. They're all in there, and you can sign up for them or get free trials or whatever. And again, that's www.micromomenttrading.com. Also, sign up for the cow report, which is absolutely free, and it has all the emails in it from all our clients, all the different services, asking questions, explaining how they're doing, and it's really good to read because you really get an idea of what's going on with everybody. As you know, the market's been really crazy this week and last week. Our overall, tomorrow is the end of our 46th week as a subscription service for Micro Moment. We're up as of last Friday, 4,863.37%. And we have our seminar every morning and sometimes in the afternoon. Micah and Tim and I are three on there, and they actually do trades. And you sit there and you watch as they're doing it, because they're explaining precisely how to interpret the chart and build up a trade. And we're also published on YouTube. Just put in Micro Moment Trading, and you pull up real live sessions that they've had. Usually there's 3 or 4 on YouTube at any one time, and you see how it works. It's exactly how it is if you subscribe to that service. And they've averaged 108.36% over these 46 weeks. This has been a slow week, just because of volatility in the market. I think Mike is improving today. He's beginning to look a little better. Mike,
sorry?
When the market improving today, things begin to look a little better.
Yeah, no, we saw major bounces on a lot of things. Hey Tim, how's it going?
Hey guys.
Yeah, we saw a lot of bounces on some of the smaller names. We're seeing a really odd, market condition in which you have some of your lower price stocks, your Ubers, your TOLs of the world, your things like that are cutting hard from $50, $40 stock price down to 13, no fault of their own. So, we saw a huge bounce in Uber today. I always keep an eye on Uber. It's a good thing to watch for that segment of the market. For me to kind of see, what it's doing. It's a good pulse, and they bounced from 14 to 20 this morning as well. So we're seeing some good volatility in that sense. And it's actually volatility of buying and selling. It's not volatility of just psychosis like we've seen the past 2 weeks.
Yeah.
The sell-off on Apple and things like that. I mean, one thing to remember is I was talking to my sister the other day, and she's like, talking to me about stocks a little bit. She's like, what do I do? Like, I'm not sure. I don't know much about this. And I was telling her the thing to keep in mind is it's not like Apple, down from essentially 350 to 250, 330-ish. But, it's not like Apple just had 1/3 of their warehouses burned down and 1/3 of the iPhones just explode and 1/3 of the PCs just snap in half, right? They're not losing all this assets. They're not losing all these things. It's just the hysteria. So we're getting really excited. We saw the first day of really decent option movement today on Apple, where the options are actually moving with the symbol a little bit. And as this thing blows over, I'm not predicting anything about when, but as this thing blows over, we're going to see a rebuilding process. Not just that, but all of the people that are coming back in to buy stocks are going to realize how good of a deal all these stocks are, and I hate to say that, good deal, but they're going to realize that Apple, based on its financials, isn't worth this, and Uber, based on its financials, isn't worth $13 a share. So, yeah, I mean, it's going great still. I think we were like maybe less than 1% positive today. We're playing super conservative, for right now, but we're getting really excited for these next few months and what the trading environment's going to be like.
Yeah. This week's been kind of slow, but it comes and goes. We've been back a long time, weeks, maybe 33 or something like that. There was 1 week we didn't do anything, but like I say, we're up over 4,800% in just 45 weeks as of last Friday. It was the 45th. We'll come out with a new number tomorrow. So all kinds of things going in. And, this is a great time. Don't remember when you subscribe to their seminar and you're following them, you're learning based on our charting system, tells you when to get in, when to get out. And you're seeing them do it. Just go watch those 3 videos on YouTube and micro trading, and they'll pop up and you see exactly precisely how that seminar works and how really good it is. What's interesting is, and this is kind of ironic, is that many people are sort of losing their jobs right now because there's so many things that aren't operating. Restaurants, you got a lot of waiters and cooks and people, don't have jobs. And a lot of other people that are otherwise highly trained people, airline pilots, people don't have a job right now. So what we're seeing, there's been movement to subscribing to that service because these guys are spending about an hour a day on these seminars, so 5 hours a week. And many times people say, well, yeah, I'd really like to subscribe, but you have to go to work, and I can't do it while I'm working. Well, now they're getting the opportunity, sort of involuntarily getting the opportunity, and they're picking this up and they're making great money. Like I was telling these 2 gentlemen yesterday, I had a text from a gentleman that had always wanted to take the service, but never really did because he had too many other things going on. And so some time ago he subscribed, and he is up for 90 days, in 3 months. He's up $5,000 on average a day, $5,000, $450,000. His IRA is up $80,000. Now he's been doing this even the entire 46 weeks. Probably started around the 30th or 25th week or something like that. But it's motivated people to do something because they're otherwise sitting at home and they can do it. They don't have to go out and violate any rules about not leaving your house. So it's really a good time to get into this. And don't forget, Mike, what do people have to do to type in a note and answer questions?
Yeah, you can just type in a comment directly into YouTube. And then we have Marcus, kind of the man behind the curtain operating the show, and he can display them up on the screen for us. So any questions, comments you have, just put them in that comment section. We'll be able to bring them up on screen and respond. And that is the primary reason we're here, guys, is to answer your questions, figure out anything like that. Here's one from Joseph. Good morning. I was excited to see the market looking much more tradable this morning for this technique. Yep, absolutely, Joseph. We are very, very excited. Good morning, gentlemen, says Frank. Good morning, Frank. How are you? Yeah, it's been difficult to trade due to the spreads and due to the fact that these stocks and ETFs will move huge, and the bid ask just won't, or the ask will take off and the bid just stays there. There's nothing you can do with that. We just kept reminding people, it's a great training period to realize that we're in this for the long run. Just because our trades are 40 seconds long, it does not mean it's a short-term strategy. So you really have to consider this is a month out of the whole year. And that's why we're already up, 4,800%, because we're able to remember and keep in mind that we are in this for the long term. So Q is still, nuts on the spreads a little bit, Frank. I've been writing down some of them.
Yeah, it's been crazy on Q, and today really the spreads have narrowed quite a bit, coming into a range that were tradable. Now we're just waiting for the bids to pick up. Clearly, there's a lot of insurance buying going on the options right now. to try to offset some of the losses in the market that people are having. So we're seeing that effect, but I think we're starting to see that become less and less. And we're starting to see the market kind of come back in. And I hope this continues. It may take a couple days, a week, but we'll start seeing the spreads and the options start moving the way that we like to trade them, get back into a normal range. Right now, we just have a lot of outside influence with the algorithmic trading, trying to offset these giant moves. These algorithms kick in, and they're buying insurance. Micah says this a lot, but you really see it in Q, just a lot of insurance buying, right? So we refer to those asks as premiums, which is exactly what they are. But that's going to wash out. That's going to end soon. The market always has a tendency to stabilize itself after these wild swings that we have. There's an equilibrium that happens in the market that we all need, and we're getting back to that. This is unusual. This is really a historic period that we're going through. But here's the thing. I look at this and I see billions of dollars just vanishing, right? And we haven't lost a dollar in our accounts. Our fund is high and dry. We're not forced to make trades. We never feel like we have to make trades, right? Because when you get into that mode of I've got to make 2 trades today in this difficult market, you're going to lose, and eventually you blow up your account. But we haven't lost a dollar in our fund, which is really encouraging. In fact, we've made a little bit. We're not on our usual 100+% a week, but we haven't lost anything, right? And I think that's a huge win right there.
Yeah, something's important to realize about that. When you take these sessions from them, and you're learning how to do this. By the way, Joseph said the SPY spreads in the TEH, 30 delta range, were around 6 cents. Anyhow, you can do this in a virtual account. The virtual account, about $100 in a real account, and they give you a virtual account with about $80,000 in it. You can do this until you're good, and then you can just switch over to a real account. And when Tim mentioned the fund, we have a corporate fund, so we can audit it. We can't audit their accounts; that'd be an invasion of privacy. But the corporate account will be audited. It just started up, so it's not been audited yet. Probably I'm working on that now. What's going to be monthly or semi-annual or what, or weekly or what? But that'll come out pretty soon. So if you don't believe these spreads, you'll actually see the corporate account and audited results. And it's pretty fascinating stuff. And when you attend these sessions, the GoToWebinar, the platform that people can ask questions and make comments on that. And our clients, that's how we know how good the clients are doing, because they're just really doing good. And everybody gets to hear, what they're doing. And on Friday, which is tomorrow, which is our fabulous Friday phone, you can actually call in and we'll meet you and talk. Everybody can hear us talking, and we can even hook you up with other people. So that's a big feature we do on Friday on that GoToWebinar. So
yeah, we're just a big family here, yeah. Which is nice.
And, but people like I said, we were talking the client we had was doing the 5,000 average a week over 90 days, average a day over 90 days, 5,000 a day. Tim said, well, that's a lot. Well, Tim's done a lot more than that. He's done 12, 13, 20,000 bucks a day in the fund. So, and you don't take a lot of risk. We're never in anything overnight. We're never in anything overnight. And we're never in a transaction. Probably 15 to 25, 30 seconds max. 15, 25, 30 seconds. And then we're good. We got all our money in the bank. Mm-hmm. So,
Yeah. Cash is the best feeling. Cash is the best position.
There's Jay.
Hey, Jay.
Very active today. Made some good trades. Good to see Jay. I use both the 1 and 5 minute charts. The 5 just to keep me from overlooking the general direction. Is that costing me trades? It's not costing you. I would say it's not costing you. I'm not sure how to phrase this. It's better in the long run. Is it costing you trades? Absolutely. Every time you look at something and decide not to get into it, right? But is it safer in the long term? Melissa uses that as well. I think she uses the 1, 5, and 15 minute on the same symbol. And we've lost a lot of trades we've let pass these last couple of weeks.
Mm-hmm.
But I mean, just between 3 of them, those instant reversals would have eaten us alive, completely out of our control. It's not anything about even reading the market wrong, because it's just, somebody will say one thing, the president will tweet, or, press conference comes out of the blue, or the Fed will cut the rates to 0 out of nowhere.
Right.
And you see this, $12 move in a matter of 45 seconds. So, you're losing trades, but you're staying a lot safer. And again, we're in it for the long run.
Yeah. Yeah. I mean, trades or opportunities lost also means you didn't lose any money.
Yeah.
Right. Yeah. And as we keep saying, there's opportunities that come up every day when we trade. So I wouldn't worry about it, really.
Frank says the only micro trades I've been able to spot have taken several minutes to overcome the spread and get profitable. Mind you, they could have been extremely profitable if I had the guts to get in. Now, this leads to one thing we'll discuss real briefly, is that this technique is a simple technique. It doesn't have one rule. Once you learn how to get into a position, once you learn how to interpret that chart, which is a proprietary chart, it does wonderful things about getting you in and getting you out of positions. Once you get in, if that ticker ever turns red for 1 second, the key to success with this technique is get out of that damn thing. Take that loss. Take that 1, 2, or 3 cent loss.
Mm-hmm.
Get about it. Because, a lot of times, in normal times, they'll do 18 trades a day. And they may have 2 or 3 loss trades, but they're only worth a nickel or 2 cents, something like that. And so the key is just to get out and don't worry about it. Don't people that start this and then they get very good at it, and all of a sudden they think they knew more than the technique, what they're supposed to, and they start waiting for things. And they start doing things differently. Then they start losing money. Then they come back and they have to relearn, and then they come back very successful again. Happened to Tim. Tim did that. He started off. Let's kind of relate that story, Tim.
Oh, yeah. Yeah. I mean, when I first started this, I picked up the technique. In a couple of days, I thought I knew everything there was about trading this technique, and then started losing a lot of money because I stopped following the technique. And what it was is I started trading to the pattern of the market rather than waiting for the pattern to align with our technique, right? And this right now, it's very easy to do that. We're seeing these trades, and we're seeing they unfold over a longer period of time to overcome the spreads. But that's not our technique, right? We don't stay in a trade for 3-5 minutes to follow the pattern. I let all those go. We've got to maintain our technique, right? Our trades are generally under 30 seconds. So there's just the longer and here's the thing, keep in mind, the longer you're in a trade, the more chance for it to go wrong. Okay. And you lose that control. The longer you stay in, you lose control over that trade, right? We have control for a very short period of time, and we get out. So don't align your trades to the pattern that you see in the market. Wait for the pattern to align to our technique.
There's one other thing too about leverage. People are always, brokers always want you to borrow money up to 50% of your account, because they make 7-8% interest on it, and that's really terrible, particularly when you're dealing with options. And then you only have 50% leverage. Going that route, if you're buying stocks and leverage, you're going to get 50%. We're getting in the 90% leverage range because we're only doing options and we don't use leverage. The fact that we're just not paying much for the instrument is the key, and we use leverage without any of the risk of leverage. And you can take, I talk about this all the time, you can take $2,000, and I know these guys get tired of me talking about this, put it into your brokerage account, do the virtual trading, learn it first, then go out, $2,000 is all you've got. If you make 6% per week, now they make that most times, 15, 20% a day. But they made an average 108% a week over these 45 weeks. You make 6% a week. your 2,000 within 24 months, 2 years, is going to be worth right at $700,000, and 60% of 700,000 is about 42,000. So at that point, you say, you know what? I'm going to do 1 week. I'm going to take that as my monthly income, not yearly, but monthly, and let the other 6% weekers compound. And $2,000. That's all it takes. $2,000 to have that. So you got a kid, and the kids look at Mike. He's not a kid anymore, but used to be, and very computer literate, and does extremely well. Instead of sending your kids sometimes to school, he's not going to learn anything except how to repay the debt or come live in your basement. Give him $2,000. Let him take this technique. Subscribe to this technique, and you have a kid that can then, in 2 years, he's going to be wealthy anyhow. He can go to any stupid school he wants to go to. So who's that? Frank? Joe, when you enter a position,
yeah, go ahead.
So far apart, you start out often down 50 cents. I don't think you meet Joe, probably Micah and Tim. What's your answer to that?
Yeah, what's so far? Well, for me, I don't. The trades that I've been trying to do the last 2 weeks, I'm not going in at the ask. I'm cutting my spread down to 4 cents and offering. I want to cut my liability, and I'm studying it. We start in the morning. I start to look at each leg to see if we're covering a spread, and it's rare that's covering a spread within the time frame that we trade in. So I'm adjusting my ask down to where I think it can cover the spread. Sometimes I get filled. Most times I don't. I don't get filled. I didn't lose any money. If I do get filled, I know I have a good chance of beating that on that leg. So that's what I've been doing.
I also think you might be in the wrong selection completely. Spreads have been bad, don't get me wrong, but I haven't seen 50 cents. That's really big. We're still trading around $1 or $2. We go out of the money to get there. There's still, a couple thousand contracts down there. So if your spread's at 50 cents, you're doing something else wrong that you should, correct. Which we should. I mean, we explain the strike prices every morning, so I'm not sure how you ended up in that spot. Yeah. But we always share the strike prices we're at, and we're hanging out around $1, $2. So yeah, don't touch anything with a 50 cent, even if you want to try to put an ask in. The things that we try to put an ask on are still, max of like 8 cents, and then we'll try to cut in between maybe. But 50 is.
Yeah, and we can be 15, 20 positions out of the money, be down at a 13 delta, 18 delta, but I'm looking for the tightest spread I can get, and that's where they're at. They're down there. But you see the market, it can jump suddenly. So I'm not concerned about covering those spreads. If you're trading in the 40 cent delta, there's no way you're going to cover the ask at that delta right now. Okay, that's normally where we trade at, but that's not where the market is at right now. So our dollar range is down in the teens in terms of the deltas, which is fine, right? Right now it's fine because we have the kind of movement to be able to cover the spreads even that far down in the deltas.
If you want to see this stuff going on, like I say, go to YouTube, backbone trading, and those segments, about an hour long, will pop up, and you can watch exactly. That was a real segment. It's really not going to help you do anything because it's old data stuff. You can't trade that market, but it shows you those are real trades, and you really see. That YouTube and that particular feature is really fantastic. Doesn't cost anything, and you'll check it out. So
yeah. When you look at the option chain, your first thought has to be, how do I minimize my risk to overcome this spread? Right? Where do I need to be? Where do I get the best pricing that I need? Where can I get it within 8 cents? And if I need to go, 20 out of the money to get there, then that's fine. I'll do that for right now. That's just how the market is trading right now. But what gives me the best opportunity for profit? At a 40% delta, 40-cent delta, 50-cent spread, it's never going to get there. It's just never going to get there. And if you put in, you put in your own ask, if you're looking on the matrix or your option chain, you can see what's going off between, the bid and the ask. Where's it getting filled between that bid and ask? Are there fills going off between that bid and ask? If there is, that gives you an idea that you have a good chance of being filled at a much lower ask. I would never go in at the ask right now, unless the ask was 2 cents away from the bid. I'm just not going to do it. Those are losers every time.
It's interesting how so little money you can do so good with this. For instance, on that $2,000, when you go into a trade, and let's say it's QQQ, and listen, the prices are weird right now, but normally a lot of times they're around $1, and you got to have 100 contracts. You got to do one contract, and that's 100 shares. 100 shares of that option. It's going to cost you $1. So if you come back, you say you make 5 cents. That's 5%, and you may do that 3 or 4 times a day. Mm-hmm. You never have more exposure than your $2,000, and you're not. You learn the rule by getting out of something that turns red. You're never going to anywhere remotely have the ability to lose any of that money. And but you just keep turning that $2,000, and you'll see when you go to those YouTube presentations, those sessions, you're going to see where sometimes they do 8, 10, 12, trades a day. Sometimes only 1 or 2, maybe none. But every time you roll that 2,000, it's totally traded. Leaving it in there and another 2,000 in. Now you got 4,000 in or anything like that. You're just getting in and out. Here's Jeff. Which trading platform do you guys prefer and has the most user-friendly tools? I use TradeStation. Now, what you guys talk about, what y'all use?
Yeah, we use TradeStation. I would say Thinkorswim is probably the best as far as negotiating commissions and platform and everything, executions. What about you, Tim?
Yeah, same for me. We all use TradeStation. That's what we have set up for our fund, and it had a bit of a learning curve for me, but it's good. I love it.
I said Thinkorswim is probably better.
Well, Thinkorswim I think is friendlier. If you're just starting out, Thinkorswim is friendlier. I started out on Thinkorswim and got up on that platform pretty quick, and their customer support is just outstanding. I never had to wait to get customer support, and they've spent literally hours with me, helping me understand the platform and setting it up the way that I want to trade and giving me a lot of information. TradeStation, though, I got to say, it's back when I was learning to drive, the cars we bought were old Volkswagens because we could take them apart, every nut and bolt, and put them back together. You didn't need a machine. You needed 5 tools, and you can do that. Well, TradeStation kind of reminds me of that. You can disassemble TradeStation down to every nut and bolt and reassemble that platform any way you like. You have so much control over everything. It's almost too much. So as you move along and you want to really fine tune a platform, I think TradeStation offers you that ultimate in flexibility. Thinkorswim is pretty flexible too. I mean, it adds just about as much stuff, but TradeStation is really kind of the ultimate.
They're all good, and they don't charge commissions anymore. They have that other fee in there, but they don't have commissions anymore. Even the Wall Street firms don't have the commission. Merrill Lynch and those kind of firms don't have commissions. What you guys take, Pex? He has a question there.
Hey, so if you toyed around with looking at the CSM 2-minute screen besides the ICE 1-minute chart, that's not a bad idea. Peck, I never learned the CSM or the credit spreads, but we should talk with Keith about that.
Yeah,
it's probably a good day. Yeah, Peck, you can talk to Keith tomorrow because Keith's been on there almost every day. I'm sure he'll be on there tomorrow, and we can hook you up on the phone. Yeah,
we should bring him on for Frankly Friday. And see if that's something possible and kind of get a baseline. I just pulled up the CSM and it actually looks like it might be helpful. So something to consider for sure.
Yeah, Keith is with our firm here, and he does these seminars. He's been doing the credit spread. The credit spread's kind of got not as good as the other techniques, so he's been sitting here learning the micro moment, and he attends the seminars virtually every day. Those sessions in the morning, and he'll certainly be able to talk to you on Friday. I'm sure he'll be there.
Yeah, and he's doing pretty good at it too.
Yeah. Hey, Peck, you're there every day. What's when we talk about returns? What do you think your returns on average? On average are running. You don't mind? Because I won't give your last name unless you don't do it. Peck, is there a way to force the charge to connect to server east? Mine consistently connects to server west. It seems to have more lag. It was 20 or 30 seconds behind my platform yesterday.
Yeah, once you open it, you just click on that tab.
Yeah.
On the server tab, and then it should load up. It's always going to boot as server west because server east is something they just added. But that should bring you to it doesn't always work for me. Okay, for those of you that don't know, when this all started, there was so much data that all the trading platforms, Robinhood, completely shut down. And our charting had some issues keeping up because there was so much data. So they did a hot fix for us, which was a server, like an extra server type situation that was meant for other things, but they adapted it on the fly to be able to host. And that's server east. So that's what he's talking about. But mine doesn't really load server east. If I just switched it right now and my Apple just paused. So I don't know if it's still loading, in the background there, or what, but it wasn't a very formal fix. It was just so we could get them, app up and running again. But
yeah, hey, Peck's actually my neighbor down here in Atlanta. I go to East right off. I found that East has been the most accurate for us. I don't think it really has anything to do with geographic location. I'm not really sure where the servers are housed, but what they've done is, they've basically doubled their capacity by splitting the traffic between the two servers. So it depends on, if a lot of people are on West, it may bog it down a little bit, go to East. I go to East first thing in the morning. It seems to have less load on it, and my charts stay right up. Stay right up to date. So, try just jumping on East first thing in the morning. Of course, you're in my area, so if you jump on East, you're going to take some bandwidth away from me. So maybe you should stay on West.
I think that's probably why West works better for me too.
Again, he says me with a question mark. Yeah, you bet. I've averaged around 5% of trade when I follow the rules. There you go. Follow the rules.
Nice. Good job, Peck.
If, however, I haven't followed the rules, I've gotten spanked. There is a very clear and forceful punishment if you do not follow the rules, and it's not inflicted by us. The market will clearly, and quickly explain why you should probably stick to it. And it's just a matter of getting used to it. I mean, I made a trade yesterday where everything was setting up. My lowers in the right place. M lines were doing, what they should have been. And I hopped in. It started to go against me. He got right out, but I looked, and it turns out that the Bollinger Bands weren't quite expanding yet. So, even if you don't follow all the rules on accident, I did it yesterday. I've been teaching this technique, and it still slipped by me. So you got to be vigilant and make sure you're on top of the game for sure.
And those sessions are a lot of fun. We have intrigue. We have romance. Monica's always involved with an on-and-off relationship. And it's real vocal about it. And now there's some other trader that takes a seminar that's trying to muscle in on his Apple action. And so we always have something going on like that,
Yep.
That's true. That's true. It's an ongoing story.
That's right. Like a soap opera. You're only reckless traders.
Yeah, but I'll tell you what, it's the most fun you can have in the morning.
Yeah. Every now and then Siri even comes in and makes
Yeah, she's listening all the time.
Yeah.
Yeah, it's funny. I noticed that when Micah broke up with Apple, Siri started listening in
Yeah,
and keeping track of him.
And
true.
now she listens. Apple's put out a deal on your phone. Now, you can cut it off, but it's going to come as already cut on. And Siri's going to be on there 24/7. Whenever you're, even when you don't think she's on there, she's going to be there. And she does make comments. I know my wife gets involved with her all the time. She entertains, gets into her phone conversations.
Conversation with her.
Yeah.
I just it's weird, these devices now that are listening, in on you 24 hours a day. I don't know.
Yeah.
It's too much. It's too much oversight.
Okay. Well, we about ended up here about our normal run here. If anybody has any questions, ask them now. If not, you can ask them during our friendly phone. There's Joseph at Pet White. Okay. Yeah, I agree with that. I've done some different things during these last 3 weeks and lost money. But if I had just followed the rules, I would have had a good lesson. Yeah. But that's just such human nature. The biggest thing is just learn to follow the rules.
And the consistency of it. Everybody comes in, they, learn it, they pick it up quick, they follow the rules, they do great. And then their performance starts to drop after they're doing great. The longer you're in it, and don't get me wrong, it's a natural human process to, learn something, and we advance. That's why college is set up in 101, 102, and then you level up 201, right? It's a natural process of humans, and it's very difficult for them to realize there's a process that's simple enough that you just have to walk in the door, learn it, and then stop.
Yeah,
right?
This technique's never going to advance, because if it did, and you're making more than 4,800% over 45 weeks, what can advance? You only go to heaven. It's either that, that's it. You can't see more.
Yeah, I'll settle for that 4,000, gain a year. I'll settle for that.
Yeah. Well, okay. Well, anybody else have any comments? Nope. Okay. Appreciate you guys being here. Appreciate everybody that tuned in. Remember, go to www.micromomenttrading.com. Sign up for the free cow report. You get it every Friday. You can get it for 20 years now. There's an explanation of all our seminars and all our micro moment stuff and things that we have coming up. And that's a good thing, because we've had one since it's not very old, only 46 weeks old now, on the micro moment technique. We've had one seminar, and we limited 25 people, and it was full. It was in Fort Worth. We didn't do it online because it was the very first one. And Micah and Tony, who was with us at that time, he's in the military right now. He'll be back. Mm-hmm. And it was a great seminar. We had dinner and cocktail parties and stuff. And it was a lot of fun. We're going to have another one in March. Good thing. Yeah. That's right. I bet we wouldn't be having it. So, anyhow, but it'll be online also. So take care. Appreciate everybody, and we appreciate you guys. We'll see y'all in the morning.
See you in the morning.
Remember. Okay.
Sounds good.
Bye.
Thank you.